Hi, good morning.
Oh, good morning, Kathy. It's great to hear your voice. It's been a long time. I really appreciate you coming in and talking to us. How are you doing? How are things going?
Things are going well. I got my
Oh,
camera working.
oh,
Perfect.
there you go.
For
Okay.
some reason, it was not working a minute ago, so I'm happy that it is.
Oh, okay. Well,
But
then, I'll join you. All right. So, great to have you here. I'm not sure exactly. You can still share your screen if there are any particular markets you want to talk about, or we could just have a little conversation here. What are your expectations out of what might happen in Jackson Hole, Kathy?
So that's a very good question because Jackson Hole is obviously front and center this week. And what's really interesting about the movements in the markets is that it's kind of inconsistent with what the media or is talking about, or what the price action is inconsistent with what the market thinks is going to happen, because the Jackson Hole Symposium is basically the perfect venue for the Federal Reserve to basically kick off the conversation or kick off the timing for tapering asset purchases. They've been talking, or the market's been talking about this for months, and they've been zeroing in on this August symposium after they passed last month. But if you take a look at the general price action of the markets, stocks hit S&P hit record highs yesterday. The yesterday actually Treasury yields were down, and even today, the U.S. dollar is kind of on its back foot, particularly against the Japanese yen and the Swiss franc. So that is not necessarily consistent with expectations for taper, right? Because if
there's no fear.
Exactly. And so all of this reflects fear. And, why is that happening? And the reason is because, first and foremost, the Federal Reserve still has a lot of options. Everyone's zeroed in on August or September. But in reality, there's two additional FOMC meetings after that in November and December. And September is when they kind of gather all their information and present their most updated economic projections. So they still have some more work to do. They're still going to get one more non-farm payrolls report before the September meeting. So they could kick the can to the road to September and not really say too much, because right now they're balancing Delta concerns with inflation. And inflation is a worry, but we all know that they firmly believe that inflation is transitory. Also, lumber prices have pretty much crashed and are back to 2008 levels. Oil prices, even though they're up nicely today, are well off their highs. So inflation is not as imminent and not much of a pressing pressure as it had been before. Whereas Delta is obviously a growing pressure that's caused lockdowns that could very well threaten the global recovery, and is more of an imminent concern. So the price action in the markets reflects the fact that they kicked the can down the road. That's what I've been trading for the past few days. And I think that may be what leads us into Jackson Hole this week.
Do you think the infrastructure deal is priced into the market that it's going to pass? And if it doesn't go through because of the conflict, not between parties on this, mainly within the Democratic Party, about how they go about passing the hard infrastructure instead of the human infrastructure of 3.5, do you think the market would be disappointed if with Biden being under pressure and his popularity dropping, that he doesn't get that this deal blows up?
Well, I think politics aside, because I usually don't express judgment on
economics.
But yes. And if your question is it priced into the markets, I think it is priced into the markets. There's always going to be an oomph when a deal that large in reality passes. But you can see that despite the Delta concerns and the Federal Reserve's wishy-washiness and the inevitability that central banks around the world are going to reduce asset purchases, stocks continue to push higher, and they refuse to fall. And I think that's a reflection of the expectations that the money is still going to come in, that the infrastructure bill could pass. Now, of course, if it doesn't, that's obviously a disappointment, but that's not what the market is thinking is a greater possibility right now.
Okay, so you talk about inflation and lumber prices coming down, and I just personal experience, I'll tell you, I've ordered a few things online, and then I've expected delivery even from someone like Walmart, and then they'll send me a text and say, your delivery is delayed. We don't know when we can get it to you. So the supply chain issues don't seem to be getting resolved. So really, with higher wages and what's happening with certain shortages, I mean, and they're not, I'm talking about gravity chairs and things from wall, just things that I didn't want to go to the store to get. They're canceling deliveries. There's supply chain issues that may make inflation a lot less transitory until that resolves itself. And I don't see it resolving itself. China has closed their ports. Isn't that going to only exacerbate it?
Maybe you should stop ordering from Walmart, because I don't have the same problems with Amazon or
Not at all.
Target. So
Okay.
maybe we should go out and short Walmart.
All right. A good suggestion. So I'm glad I brought you on.
But your concern is a legitimate one, because that supply chain issue was very evident in the UK PMI numbers, where they slipped to 6-month lows. So, the US is not the only country facing supply chain shortages. And that is why the Federal Reserve has to act. It's just not a matter of if, it's a matter of when. And I think the supply chain issue is a very serious one. And I agree with you that these things are not resolved quickly. And when suppliers raise prices, they're not going to be willing to drop them quickly, because they have to make up for a lot of the lost time and profits that they have. So all of that is an issue. But I think that because job growth has been very, very strong, the Federal Reserve does need to act. And so, it's just whether or not they want to tread cautiously and wait for a few more data sets before doing so. So it's not as if they're going to wait to November, December. It's just a matter of August or September.
Okay. Why don't we go to your wheelhouse currencies a little bit here? And I want to talk about, the dollar has had, what a contrarian play coming into 2021. And Blake talks about it a lot. People said the best trade for 2021 was short the dollar. Okay, everyone came into 2021 bearish a dollar. We bottomed at 89.20. Recently, we made new highs, broke out over that little double top at 93.20, and have negated that breakout. Is this the big sell that the bears were looking for? Is this just going to be a correction, in your view, in the dollar before we get another leg to the upside? Where are you at on the buck?
Well, I think if you look at the US dollar itself, one of the main reasons why it's had so much, it's seen, that much pressure initially, and then, it's kind of gained a little bit of traction now, has to do overall with risk appetite. And I think the real question is, do we all believe that the party in stocks can continue, right? And it's a very interesting question. And I will be the first to say that I have been skeptical of the stock market rally throughout these highs.
I have for about a decade. So, yes. So I'm asking, the stock market performed very well with this dollar. I thought that once the dollar turned, we might start getting some risk off. It fought that headwind. And if the dollar is going to start coming off, if it could do well with a rising dollar, you would think it'd be jet fuel if the dollar is going to start heading lower. So do you have a view on the dollar?
So I actually think that the dollar is due for a stronger rally. And the reason for that is because I believe that at some point stocks will correct. And when they do, it's going to cause money to flow back into the dollars. That correction could very well be caused by the kickoff of taper and maybe the expectations that the Fed could raise interest rates in late 2022. And those expectations kind of growing as time progresses, and leading the Fed from being behind the curve in the taper cycle to ahead of the curve in the tightening cycle. And I think that could really draw demand back into the markets. And there's a lot of risk out there. And it's hard to imagine this rally in stocks and this continuation of risk appetite persisting.
Okay, well, I want to ask you a question I've asked everybody, and I finally have answered it myself. The canary in the coal mine when it comes to stocks, it's been the Russell. The IWM has been moving sideways, hasn't made a new high since either March or April. And these are domestic issues. Is there a message in the fact of the Russell 2000 underperforming and unable to make new highs with almost every other index domestically and globally? What do you think about what's happening there? Any view?
Um, Honestly, I don't have too much of a view on that. You said you answered
Okay.
the question yourself, right? So I've been head down on, kind of the global macro story and kind of riding the opportunities in some of the foreign currencies as monetary policy diverges, and focusing far less on what the divergences between the U.S. indices. That's kind of Boris's wheelhouse.
Oh, okay. All right. So when we look at something like the precious metals with a potential taper coming on, and it was really a dramatic move. We had a couple of Sunday evenings ago where there was kind of a little flash crash in gold and silver. Can gold and silver be okay and trend higher with the dollar possibly still? Can they both go higher together, Kathy? The precious metals
Yeah,
and
I
the
mean, I
dollar?
think so. I think if you get, a situation where markets get nervous, you could definitely have that opportunity.
Okay. And the gold silver ratio, do you watch that at all? Because a lot of people that, like I think the Reddit people think they're going to be able to muscle short squeeze the silver to $1,000, and all these ridiculous kind of levels for where silver could go. Do you prefer silver over gold, or do you think it's more you'd be better off in the monetary metal than the semi precious metal industrial?
I love trading spreads. And I think
Okay.
that, the silver and gold spread definitely has its opportunities. Sorry, I'm getting distracted.
Yeah.
Right now, I'm trading dollar yen. I'm making profits on this drop here. So I'm
Okay.
in trades as we're speaking. But yeah, I mean, spreads in terms of equity spreads, commodity spreads, currency is obviously a spread
Right.
itself. But yeah, I absolutely, like trading spreads. And I think that in terms of gold and silver, yes, I do think that they can move at the same, obviously move at the same time, but the relative change that we're seeing in the spread, could present itself as a lot of opportunity. So I think, for the most part, right now, with the Delta variant growing, I think the spread could move more in favor of gold than silver.
Okay.
And, but honestly, Dale, I could be wrong because the market doesn't care about it right now. It doesn't seem
Yeah.
to care. And that's what we're seeing right now. But while that may be the case in stocks, that's certainly not the case in currencies, because there's a huge amount of opportunity that we've been taking advantage of in regards to the varying Delta scenarios across the globe. Like I've been short Australian dollars for the past few weeks, and we caught an Aussie CAD short trade at the beginning of this week because of the extended lockdowns in Australia. This morning, we banked pips going long the Canadian dollar against the Swiss franc, and we've been long Canadian dollars this week. Not only because oil's been doing so well, but because Canada has been, they just newly vaccinated. They're not dealing with the new, surges and waves that other countries are, so there's opportunities that the stock market is ignoring in currencies.
Okay, so you're short the yen. Do you believe in the correlation of U.S. dollar yen heading lower means lower yields? And it's I've seen them marry up at times, and I'm wondering where you're at on yields, because people have expressions. It's all about yields. That's a yardstick and measurement that we use for valuations. In fact, the FANG stocks have been doing better as rates have softened. You have a view on yields and rates sideways, especially with the taper if there is a taper? Do you expect yields to rise, or the market has reacted that a taper is going to slow things down and it takes yields down? Which way do you think we could go on the 10-year?
Well, I look at yields every single day. It's absolute, key component of my trading. In fact, this morning, the reason why I went short dollar yen was because 10-year rates were up over 1%, and I felt like it's getting sticky. And I didn't think that it was going to stand much higher against the 20 SMA on the daily chart. So we went, and even though, yields are up, and normally that would be a sign to buy dollars, because of the inability of dollar yen to rally and because the yields were touching that 20 SMA, I went short dollar yen. So yes, absolutely. Yields are very, very important to, and I look at that not only for my New York session trades, but also the yields for my Asia session trades. So that is one of the most important components of what I try to teach our members to look at every single day. Now, in terms of the overall picture of yields, you're absolutely right. They've been consolidating. For the past, since late July, we've just been in this kind of broad range trading zone. And I think that the taper will, probably initially lead to a rise in yields, but it's really about how aggressive the Fed signals that they're going to be. And I think they're not going to be that aggressive, or they're going to sound open-ended. They're going to open the door up to tapering, but I think that they're not really going to suggest that, it's going to be an aggressive cycle. And that could end up leaving yields pretty much, where they're at, because what's the Fed's goal, right? What's the central bank's goal when it comes to these actions? To contain volatility, right? No one wants to see a huge surge in yields, especially if there's especially if the global recovery is precarious. So I think that they're going to probably take the action either August or September, then talk it down. And that's really going to disappoint, any market watchers, because it's not as if the recovery is so strong that they're just ready to say that they're going to taper and then, set the very clear schedule for their plans to do so.
Okay, so Paul, I assume, is probably thinking about his legacy, because it's possible he's not renominated. His term ends when? I think early next year. There's not that much time. So I think that kind of fits with him not wanting to do anything radical that's going to create a market event if this is his swan song as Fed chairman. Do you think that could play a role? So he doesn't have to go sing Kumbaya with Janet Yellen and Ben Bernanke like he did when he was tightening at the beginning of his term? I think he remembers that.
So politics aside, I think it wouldn't be wise to do anything radical, period. As a central bank, it's responsibility to contain volatility and to do what's right. Maybe I'm an idealist, but this is not the time to do anything radical. I mean, if we were in a soaring inflation environment and I had the justification for that, I'd say, let's go ahead. But, there are signs that inflation pressures are starting to ease, and there's a lot of risk ahead. And so, as a central bank head, it is his responsibility to not do anything radical, legacy aside. And also, it is every central banker's kind of ideal to minimize volatility whenever a big action is taken, which is why he's been very clear that when they are ready to taper, they'll be sending a lot of messages and making sure there's plenty of time for the market to adjust to that. And I think, that's what we're going to get from him. Okay,
well, you look at the VIX, and I know we're not at real high levels, but to me, it doesn't look like they're maintaining volatility. If you look at the action in VIX, in 1 week, we went from 15 to 25. A few times this has happened in the last few weeks where you've had spikes and then it gives it up. And not just small spikes. I mean, to go from 15 to 25 is almost a double of volatility in a few days. So do you read that? I think plays into your feeling that the market is overvalued. And to me, it seems like there's some problems with maybe market structure, that we could have the VIX jumping around the way it does instead of just grinding sideways. You're getting pretty good rallies, and then you're getting vicious decline. So do you buy and it's kind of happening with the markets, do you buy the maxim that markets top with violence and bottom in silence?
So,
That-
everything you said is exactly what I think, which is that all that volatility in the VIX, which
Yeah.
is a just a way to put it, is one of the signs, one of the reasons why I'm so dubious of this rally. And it's hard to, granted, today, futures are up far less than they were yesterday. And maybe,
Right.
we're there. But I
Yeah.
think, when we're at these tops, you shouldn't be the volatility in the VIX is a reflection of indecision.
Right.
And I think when we're at these tops, we're at these levels, we should not be seeing this volatility in VIX as markets were going to power higher. And I think that's another red flag for me. And that's actually something, I'm glad you're watching it, because that's something I'm watching very closely as well.
Yeah, well, I think this interview may mark a high for a pretty deep correction in the market, Kathy. I'm talking my book. I'm talking my book. I own a lot of December puts that I'm underwater on, and I'm thinking that you're my good luck charm, and that our interview is going to cap this rally. But I'll tell you something. It's so refreshing, and what an excellent interview. And I don't want to let as much time pass between the times that you and I get to talk about markets together.
So I want to add something, Dale, just to give people a sense of what I do. I think that if anyone's followed what I do, I think from what our conversation is geared towards, I think it's important to realize that when it comes to trading, it's absolutely essential to fuse fundamentals with technicals. And fundamentals, and our whole conversation was about fundamentals, because fundamentals drive the trade on both a long-term as well as a short-term basis. We talked a lot about long-term direction of currencies, which is extremely important, because trends when it comes to fundamentals do not change on a dime. Usually in the economy, the pandemic gets worse and worse and worse before it gets better, or countries' economic performance improves or deteriorates on a consistent basis before it turns around. And so, what's extraordinarily important is to use your technicals and in those directions. I have my own technical indicators, you have your own technical indicators, everyone listening has their own technical indicators. How do we pick the best trades? Do we just blindly follow our technical indicators? Absolutely not. The key to my success is that I use my fundamentals to filter the technicals. So for example,
they give you biases and narratives, and your charts are your triggers.
Exactly. So for example, I've been bullish Canadian dollars, for the past few days because oil is up, and there have been signals on my technical indicators where to sell the Canadian dollars, but those are not the ones I took. I waited for the ones that were consistent with my fundamentals, and that's the real takeaway that I want to leave with your audience, which is that.
All right, but I have. Go ahead, but I have one more question, because you've mentioned COVID at least 5-10 times in the last 25 minutes. What's your take on how this thing is going to go? Do you have a sense that this could end up being worse than what happened a year ago, even though we may not have lockdowns? I mean, I'm confused. I see the president at times wearing masks, and then I watch an NFL game and no one has a mask on. And I think the whole country is pretty confused about where we're at. Do you have any clarity about where you think we're going with this into the fall?
In no way, shape, and form am I a medical expert.
Right.
But there are more and more variants. There's certainly more and more cases with Delta. Some of the US states are hitting record highs. Delta is affecting children a lot more. I can tell you that I am switching my child from a school, but I have a 3-year-old, and he goes to a school right now, and he has for the past year and a half, where they don't wear a mask. And thank God, no, there's been no cases at all. But we're switching him to a school where they do, because we're worried, because there's no vaccines for children. He's young, and
Delta is a different story than the early one.
Exactly, it's a different story for children, and they say Lambda is probably worse. And so I'm not a medical expert, but I'm personally taking my precautions for my own family. And I think that the equity market is not reflecting those issues that are already becoming apparent in other countries. And so that's the way I look at it. And if you share my view, then that is a view that, and for you and for everyone listening, that is a view that can help you drive your trades. It's been a view that's been helping me drive my trades. And that's how we all win, I think, in
Yeah.
terms of trading, which is not looking at technicals blindly, taking everything that we've talked about today, Dale, and using that to only select the best technical trades that are fundamentally supported.
The consummate pro and great mother, Kathy Lien, my trading warrior sister. The best way for people to continue to learn from you and hear what you're thinking, Kathy, is where? At
Is
your
So there's two
what?
places.
Okay.
You can follow me on Twitter, Kathy
Okay.
Lien FX,
Okay.
or you can trade with me every day at bkforex.com.
May everything be very green for you, Kathy, and healthy.
Thank you so much. You too,
It was
Dale.
so. It was great talking to you, Kathy. Kathy Lien, everybody. A lot of people really enjoyed seeing and hearing you, and I appreciate your giving spirit, coming here and sharing your knowledge with our community.
Anytime.
Thank you, Kathy.
Bye.
All right, so that's a wrap, everyone. Don't remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Good hunting the rest of the day, and hope you enjoyed that interview with Kathy. I had a great time doing it. So I'll see you guys tomorrow. Adios. And I'll get a haircut soon. Lein. Okay, Dolce?